Hello, I'm Working Dad Trader, and on this channel, my aim and my mission is to build a better future financially for my family. I'm just a working class dad. Like many other people out there, I have to work hard in my full-time job and try and use money to build a better future. Um, on this channel, you can look at how I've started from nothing and I've slowly built up money to invest. So hopefully it's inspiring you to take action yourself, and together we can do this. So, you found a stock that you like, you've done your fundamentals. If you don't know how to do fundamentals when looking at a stock, looking at the financials, check out my short link below and that will give you a basic idea of what you should be looking for. So you're happy with the stock, you like the financials, how do you get in? Today in this video, I'm going to give you free insight into the technical analysis tools that I use to help judge whether it's a good time to enter the market and push that button to buy or not. Okay, so one of the basic tools we can use straight away when we're looking at a stock and whether we should, at what point we should invest, and looking at where it's a good place to buy, to enter the trade. The first basic thing you really need to look at is the trend. So that is a big key to in which direction generally the stock is going. On this example, again, we've used Facebook just as an example, and I'm on a daily chart. And this is the chart at the moment up until yesterday, and you can see since March here the trend has been an upward trend from Facebook as it's been going up, pulling back, going up, pulling back, going up. So you can clearly see since March the trend is an upward trend. The momentum is up. Yes, it's had its dips along the way, but remember, stocks just don't go up in a straight line. They go up for so long, then they have a pullback, then they go on again and have a pullback, and this is how stocks go up over a period of time. So straight away you can see that is an upward trend. If we find an example of the opposite, let's look for Facebook on here again. Right, so zoom that in a bit. On this chart, you can clearly see this started in February 2020 and ended around March 2020. You can clearly see that this short trend was only about a month long, is a downward trend. As you can see, it's been making lower highs on the way down and lower lows all the time, and it's a clear downward trend. So when looking straight away at a stock, if it was Facebook for example and we're at this point, would we be looking to buy, say, here? No, we wouldn't, because we would look at the chart, have a look at the basics of where is the stock going at the moment, and at the moment it's on a clear, at that period of time it was on a clear downward trend. So we would probably wait for signals of an upward trend. So we would get to down here, and as the days progressed on, and then it started going higher out of the downward trend channel and started making higher highs here and higher lows, then this here would be a clear example, we're out of the downward trend. So a really good buy point would have been possibly this green candle here, as then we can see then we've come out of the downward trend and it's a good chance we're going to be in an upward trend. So looking at the charts and doing your technical analysis is really, really important. Looking at the trend of the stock, if it's on a downward trend or an upward trend, sometimes the trends go sideways and it just keeps going sideways. It will go up to a little bit and go back down, and so that you can almost a straight line. And just remember the key, everyone, stock traders use the same phrase, that the trend is your friend, and it's really, really important to use that, because a lot of the time that is correct. Some people try and go against the trend, and that is the extremely risky business, because it just generally you're wrong. It's just generally I find safer to just go with the trend. Basically, if the trend's an upward trend, then we're going upwards, and if the stock's in a downward trend, then it's not really a great time to get into the stock until it's come out of that downward trend and it's starting to go on an upward trend again. Okay, so at the moment I'm using TradingView, which you can easily find on the internet. There are plenty of other, obviously, platforms you can use to look at charts. So with this, we're going to use support and resistance. Now, support, when we look at the candlestick patterns, is when it goes down and hits some level of a support where the buyers then say, no, that's enough selling, and it finds buying support to go back up. And resistance is where then the sellers begin to push it back down, as what we call resistance, a bit like a ceiling. So in this example, it's a very basic example. I've used Facebook as a chart of Facebook to have a look a bit of support and resistance. And when we're looking at possible signs of when we could buy or sell a stock, if we look at back in July, it was finding resistance against, which is the yellow line here, dotted yellow line, and it was bouncing off that a few times, and it couldn't break through the resistance. And it wasn't until the 30th of July that it obviously jumped up on open above the previous resistance, and then it went off again. But as we can see, then for a long period it bounced where that was resistance, that became a support level, so it would go up and then it came back down and it hit the previous resistance, then became a support level. As you can see, it's hit that a few times as the new support for the Facebook stock, and it also found some resistance further up where it kept hitting this blue line that I've added in. It got close to it there, got close to it, couldn't get through, came back down again, and then it tried again, and then this time it got through the resistance and I went away on its next leg up again. So we can use support and resistance to look at levels of where the stock is. If we were back here in the 31st of March and we were interested in buying Facebook, and we would have noticed that this is a resistance line and it's bounced off it 2, 3, 4 times, and when we saw that it broke through the resistance, then that is a reasonably good buying sign to say that then that stock is going to move on upwards. So we could then look to buy around here and hoping that the stock then would
carry on up, which again in this example it came back down and hit the line again, so that previous resistance again became a support level, and it bounced off the support level and up we went, and it pretty much came back down again and it's gone back up again. So that's how we would operate with using support and resistance, just to give us some gauge of where the stock is, where possible support for the stock is, and where there is possible resistance.
So that's just two different techniques that you can use to look at technical analysis on a chart. You can combine them both. This is just part one, so make sure you check out part two, where we will look at some more techniques we can use when trying to get a stock. Okay, thank you for watching.